My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, gang. Today we've got a special guest zooming in from Huntington Beach, California. Very experienced real estate investor, especially in the multifamily space. Mike Morawski is a real estate investor. He's a best-selling author. Mike, I think you got a brand new book that just came out, and he's also a trainer as well. So what do we got? Multifamily Investment Secrets. Love it. Nice looking book.
Yeah.
And I'm looking forward to our conversation. So welcome to the show, Mike.
Well, thanks, Dave. I appreciate you having me on and taking time to chat today. So
yeah, for sure. Well, it's always fun. So Mike, give us a little snapshot on the investing side. What are you investing in these days as of mid-2025? Is it multifamily? I think you mentioned a little bit about light industrial. What does a portfolio currently look like?
yeah, so our major focus is multifamily housing. We buy large apartment complexes. We partner with private investors and we share in the profits. But we also do some light industrial. So we'll buy warehouse space with triple net tenants in that warehouse space. And then we like to add solar to those buildings, become the power company, and create a bit of revenue from those solar panels. So now we become the power company. We add more revenue to the property. It increases the NOI, gives us the ability to bounce out and refinance those properties and pull some capital out back for the investors.
Cool. So when it comes to the multifamily side of things, what's kind of your buy box? What market areas are you in primarily? What does a portfolio look like? And then we'll talk about the light industrial as well.
So Dave, for years, I could have told you that we love the Southeast. So, if you looked on a map from Raleigh, North Carolina to Dallas, Texas, that whole smile across the bottom of the U.S. I still like those markets, and we monitor about 40 submarkets around the country. But added to that, I really like some of the Oklahoma markets, Tulsa primarily, as well as Northwest Arkansas, some of Tennessee. There's a few markets in Tennessee. So again, from Raleigh to Dallas, and we own assets in Florida and Texas and Oklahoma. And so we have, quite kind of a large bandwidth.
Very good. And then on the industrial side, same markets or different markets?
Yeah, that's a really great question. So it's kind of funny because I really like to be in a red state because the landlord laws are friendlier to the owner than they are to the tenant. And so red states make sense in multifamily, but in light industrial, blue states make more sense.
Well, because it's triple net stuff, right? So they're
right.
Your tenant's in charge of most everything.
Well, the big piece of that is that we're taking putting solar on these buildings, and there's a lot of tax incentives in those blue states. So, we're doing a deal right now in Illinois that we have about $700,000 in tax credits. Beautiful. That our investors can participate in and, have some write-offs. So, for the light industrial stuff, there's only 5 states in the U.S. that really work for what we do.
Okay.
And in the multifamily, like I said, 40 different markets. So,
well, I've interviewed a gazillion guys about multifamily, Mike. So I love this idea about light industrial, especially the twist you guys have got on it with putting solar on there. That's different. So tell me a little bit about how you came across that and what that typically looks like in like, let's say, one of your more recent projects.
So that's a great question. And I have to laugh because one of my oldest friends, and we've been friends for over 30 years, has been in the solar business since 2004. And he's been after me to put solar on multifamily, and it doesn't work on multifamily. There's too many tenants, too many independent bills. It just doesn't work. So we started talking about, hey, what if we did single tenant, single use properties? Maybe a Walgreens or a restaurant, or so we started looking at warehouses and distribution centers, and we're doing a deal right now. As soon as we complete this one, our next one will be a FedEx or an Amazon building, where we will actually go in, we'll buy that building. We have a triple net tenant in place, and single tenant. We own the real estate. We collect the rent. We make a profit on the rent, but then we're adding the solar component and then having the large tax credits. But the interesting piece about it, and I kind of alluded to this a minute ago, is once we add solar and we add that additional revenue, now we've increased the NOI.
Yeah.
We all know commercial real estate's traded on NOI. We've increased the value. We can go back and do a cash out refinance and sit in that property for a while and collect cash flow.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Very cool. So, Mike, typically when you're putting the solar on one of these properties, are you basically providing power for that tenant and that tenant only? And if so, does it cover all of their power needs, a portion of their power needs? What does that kind of look like?
Every application's different.
Yeah.
Again, my partner in this venture is an expert in the solar business. Mm-hmm. But what I can tell you on this deal we're doing right now, it does cover over what the tenant needs in power. And we have a great tenant. It's a food distributor in the Chicago market, and they have about 20% of the Hispanic food distribution in the Chicago market. Been in business 15 years. They're a AAA rated tenant, so we're in a really good position. But we carry more power than they need. So
even in the winter months.
Yes.
Wow.
Yes. And we're able to contribute some back to the grid. So
when you're doing that, is it like an advantage for the tenant to buy power off of you guys? Do they have any choice in the matter? How does that kind of look?
Well, the tenant's got to buy electricity. And we've already negotiated with the tenant, and we would negotiate with the tenants up front. And these, my partners put on, hundreds of thousands of square feet of solar on commercial buildings since 2004. So the model's proven out, but it's not proven out where our investor groups own it, right? It's proven out where other businesses own it.
Got it.
And so the tenant would have a choice. If they wouldn't negotiate with us up front and allow us to do that, during the purchase, then we wouldn't be a building that we would buy.
Okay. And do you find typically that they're going to be getting a better deal with you guys with the power, an equivalent deal? Is there an incentive for the tenant to hire you guys as the utility company in that sense?
Not really. So it's the same cost. We charge the same costs. So the tenant is going to pay the same amount that they would be paying. We're just a different utility supplier for them.
Right. And in your experience, Mike, adding solar onto these properties, increasing the NOI, what have you kind of seen as far as like a value increase in the properties? Thanks to that part of the NOI increase?
Well, I think you can look at it this way, Dave. Every dollar you add to NOI at a 7 cap will add about $240 in value to the property. So, if I take my $65,000, and I'll just figure it out quick for you. If I take my $65,000, which I really have no expenses against, it's straight, to the bottom line. And I take
That's
that
the profit you're
again.
making on the power from one building for one tenant, basically.
Correct. And I
Wow.
take that to, and I take that to my bottom line at a 7 cap. It's about $928,000.
Beautiful.
So
Yeah.
I'm adding value. I'm putting solar on, and the solar is costing me about 750,000 to put on, but I'm
Mhm.
increasing the value 900,000. So I'm actually making money, right? A
Mhm.
couple $100,000 there.
Beautiful. And then with the tax incentives from the states and things like that,
All
other.
off balance sheet numbers.
Mhm.
So we don't calculate any of those numbers in the returns. And
Mhm.
in this particular deal, our investors' projected return is 20% a year with a 9% preferred along the way.
Nice.
But
Yeah.
we don't take any of those tax incentives. Those aren't calculated in. Those are all off balance sheet.
Okay.
And you may or may not be aware, Dave, but the current administration just passed a very good tax incentive bill again.
Was it big and beautiful?
It was the big and beautiful bill, right? Right.
Yeah.
And they reinstated 100% bonus depreciation.
Yeah.
So and that along with opportunity zones. So there's a lot of opportunity out there today, and what I think is really interesting is where we're at in the market cycle. Because Dave, there's no geniuses in this business. There's only market cycles.
Mhm.
And how do we, where do we sit in the market cycle? When are you buying and when are you exiting in that market cycle?
No, that makes a lot of sense for sure, Mike. So you got you teased us, you gave us a little glimpse of your brand new book. Tell me a little bit about that.
Yeah, great. Thanks for asking. So this is a Multifamily Investment Secrets, your explosive guide to wealth in the multifamily business. Dave, I've been in business. I've been in the real estate space for 30 years. Before that, I had a contracting business. But I talk in here about all the moving parts, right? When we buy a multifamily deal or we syndicate a multifamily deal, there's a lot that goes into that. How'd
Yeah.
you pick the market? What's your buy box? How did you underwrite it? How conservative or non-conservative were you? What are your negotiables and non-negotiables? Your due diligence, you're going to contract, your capital stack. And then I talk in here a lot about a 450 unit multifamily deal that I bought with little money down, owner financed, and cash flowed is one of my best properties I ever owned. So,
Are you, because you're very tied into the market, you've got lots of students that are actively looking for deals. Are there still opportunities like that, or is that the good old days from the 90s and
yeah, no,
2000s?
it's interesting you even asked that right now. We just got off the phone with a seller's agent, and the seller wants to 1031. And the seller doesn't have, it's not a lot of money. It's about $400,000 that the seller is going to 1031. And we're like, why are you doing that? So I want to ask enough questions to get to the seller's need and how can I satisfy the seller's need? So whether you're buying a single family home, 100 units or 400 units, it still can be done today. What you're doing is you're looking for the seller's pain and solving the seller's pain. So the
Right.
seller didn't want to pay taxes. So, we had a conversation with the seller about a structure we could put in place where the seller could get monthly and annual money out of the property and not pay tax on it. Or not pay capital gains tax, right?
Right. Yeah.
Still have some income that's tied to that, but we can, there's a structure you can put in place to show it as rent income. So, you just have to find sellers that are open to the opportunity.
No, exactly. There's always opportunities. Now, with everything that's shaken out in the multifamily space over the last couple of years, you mentioned there are no geniuses, but there are folks that understand market cycles. There are folks that have been through numbers of cycles like yourself. Where do you see things going in multifamily over the next 12 to 24 months?
Yeah, that's a great question. So, like I said, there's market cycles and markets go up for 8 to 10 years, they come down for 8 to 10 years. And it depends where you're at, which side of the cycle, which quadrant you're in. And I firmly believe, and Dave, I've been at this 30 years and I've seen these cycles, and I've always said, boy, if I could just get in front of the next bull run, right? Because I think we're going into a time that we're going to see one of the largest redistributions of wealth that you and I have seen in our lifetime, or will probably see in our lifetime. But I believe that within the next few months, could be 3 weeks, could be 3 months, could be another year, but we're cycling on the bottom right now. I believe we're at the bottom, just kind of floating back and forth. And I always blame the media, Dave, because once the media changes its story, then all the investors and everybody else changes their mindset.
Oh, huge. Yeah.
But by the time the media changes the story, the market's already changed.
Yeah.
So I believe today you're in a position where you can get back in the market, come off the sidelines if you've been a passive investor sitting there, get back in the market, be in front of the next bull run, have the wind at your back for the next 8 to 10 years, and top tick out. And you're gonna do really well.
Nice. Makes a lot of sense to me. A lot of people kind of made a few big mistakes a few years ago, but I agree with you. And I think I don't know what the timing is either, but 6 to 12 months for sure. I think it's going to be bottoming out. We're going to see a lot of foreclosures coming down the pipeline with all this variable debt and things shaking out. The banks kind of foreclosing on some of those properties. I think there definitely will be some opportunities. So Mike, I'm sure there's going to be lots of people listening or watching this who would like to connect with you, maybe find out more about the book or find out more about you. Where's the best place for them to do that?
Yeah, thanks for asking. And I know you really kind of want me to limit it to one place, but I'll just tell it, wherever you hang out on social media, you can find me. Instagram's a great place, or connect with me directly. Reach out to me at my email at mike@mikemorawski.com. I love to meet people, network, get to know people. Let's set up a call and, have a conversation about, our synergies, what each of us are doing, and how we might be able to help each other.
Sounds great. Mike, thanks so much for being on the show. I really appreciate it.
You bet. And the book's on Amazon, Dave.
There you go. Let's put it a little closer so we can see it again. There we go. Multifamily Investment Secrets. Mike Morawski on Amazon. Good stuff.
Thanks,
all right, everybody. Take care, and we will see you on the next episode. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.